Daimler lifted the outlook for its trucks division for a second time in 3 months on Friday, while its overall profit fell on costs related to diesel engine updates, vehicle recalls and restructuring. Earnings before interest and taxes, EBIT, at Daimler Trucks, the group's second-largest unit by revenue, will significantly exceed year-ago levels, after jumping by a third to €614 million, $725 million, in the July to September period, the company said. Daimler and rivals in the truck industry including Sweden's Volvo and Volkswagen have seen rising demand this year for commercial vehicles. In late July, Daimler said it expected EBIT at trucks operations to be flat after previously guiding for profit to fall below 2016 results. Truck growth is in full swing, and order books are going from strength to strength, said Bernstein analyst Max Warburton, who has an Outperform rating on Daimler stock. Quarterly truck orders at Daimler surged 47% thanks to strong demand in North America and Asia, where the German manufacturer is a market leader, and increased 11% in Europe, according to Warburton. Volvo shares hit a record high on Friday as it also raised its outlook for truck markets on both sides of the North Atlantic this year and forecast a further strong recovery in 2018. Daimler shares were flat at €68.92 as of 12:07 GMT. Group costs bite. Group operating profit at Daimler meanwhile slipped to €3.98 billion from €4.04 billion a year earlier, including €523 million in one-time costs. Daimler spent €223 million last quarter to update over 3 million Mercedes diesel engine models in Europe to curb pollution and help avert driving bans. It added another €230 million to fund a recall of more than 1 million Mercedes models worldwide to address potential unintended airbag deployments. Besides another €70 million for trucks restructuring, Daimler said it also needs to spend €100 million to fund a planned reorganization of its passenger cars and trucks units. If special items are excluded, Daimler delivered excellent results, with trucks and luxury cars being the main drivers, said LBBW analyst Frank Biller, who has a buy recommendation on the shares. Third-quarter sales of luxury Mercedes-Benz cars rose 7.9% to a record 573,026 models, powered by strong demand for sport utility vehicles such as the GLA and GLC models and the E-Class. That beat the 1.2% gain to 499,467 autos at rival BMW, which Mercedes last year eclipsed as the world's biggest premium automaker by sales, and the 3.6% rise to 471,850 cars at Volkswagen's Audi brand. The group stuck with its guidance for a significant increase in group EBIT this year and said it expects EBIT at its finance arm to also significantly beat year-earlier levels, having previously guided for earnings to rise only slightly. Separately, Daimler has asked the European Commission to act as a principal witness in investigations of an alleged collusion among German carmakers to be exempt from potential fines, Finance Chief Bo Weber said on an earnings call. The European Union and German antitrust regulators have been investigating whether Daimler, VW, BMW, Porsche, and Audi colluded to discuss prices, suppliers and standards to the detriment of foreign carmakers. In principle, this is about possible antitrust agreements among German carmakers that have been discussed in the media some time ago, Weber said, declining to be more specific.